Welcome to part 2 of the free course series. I'm QC Lee, the founder of the Motivated Trading Company. Now, in the last video, you got a full introduction of the stock market. Now, if you haven't seen that, it's crucial that you go back and get that information. Now, in this video, you're gonna get an introduction to options trading, and by the end of it, you will never see trading the same. Now, without further ado, let's get into it.
Yo, QC Lee here, back with part 2, baby, of the free course. Now, congrats again if you made it this far. You got what it takes. Let's get it. Now, this video is for you if you want to invest in the stock market, but you don't want to wait 3 to 5 years to make 30 to 50%, and that's only if the stocks go up, okay? You don't have to wait that long, and you don't have to just wait to make money when stocks go up. Now, in this video, I'm going to give you a full introduction of options trading and why you should trade them too. Now, without further ado, let's go ahead and get into it. What are options contracts? Okay, an options contract is a contract. All right, now I don't want you to get too hung up on the word contract here. I just want you initially to think of this as a vehicle to trade with. An options contract is just a way to make more money on the stock market. Just think of it as a vehicle, as something that we use to make more money. Now, this is a contract vehicle, okay, giving you the right, keyword right, not the obligation to buy or sell a stock at a certain price on or before a chosen date. Now, I know this sounds a little confusing. I know that was a lot at first, but stay with me. It's all going to come together, and it's not really as complicated as some of these other traders might make it seem, okay? So remember this, screenshot this if you want, but I'm going to go deeper. Now, let's explain, okay? There are 2 types of options contracts. Remember, think of it as just a vehicle that we use to trade. 2 types. Number 1, calls. These contracts give you the right to buy shares, keyword buy shares of a stock at a certain price on or before a chosen date. Now, on the other side, we have puts, contracts that give you the right to sell shares of a stock at a certain price on or before a chosen date, baby, okay? This is pretty self-explanatory, but we're gonna get more into it. But yes, we make money on both sides. This is another reason why we trade them. We don't have to wait for stocks to go up to make money. When stocks go up, we make money. When stocks go down, we make money. As long as stocks just don't go in a stagnant line, we're gonna be able to make money. Now, just remember, if you think the stock's going up, you buy calls. If you think the stock is going down, you buy puts, okay? Calls up, puts down. Pretty simple stuff to start out. We're gonna keep it short. We're gonna keep it sweet. We're gonna keep it simple so you guys can succeed, baby. Now, let's continue. Just some more terminology of parts of options, okay? The strike price. Remember, I said earlier, you can sell or buy the stock at a certain price. This is that certain price. All right, now I'm gonna explain. It's called the strike price, the agreed upon certain price at which the stock can be bought or sold at. So remember, I said calls, okay? So calls gives you the right to buy the stock at a certain price. So calls give you the right to buy the stock at your chosen strike price. It's gonna make sense soon, and it's not as important as the buying aspect of it is not as important as you'll find out really soon. Now, the expiration date. Remember, I told you on a certain chosen date. This is the chosen date which your option will expire on. Now, you must sell or exercise your right on or before this date. What does exercise mean? Let's get into it. When you use your right to buy or sell those 100 shares at the certain price, okay? Yes, 100 shares. I'm gonna get into that too in a second. Stay with me. It's all gonna make sense. Now, don't even worry that much about exercising because we don't do this. We don't do this, okay? When you do this, you avoid your leverage, okay? We'll get into that leverage in a second, all right? This is good leverage, trust me. So when you exercise, basically you're choosing to buy or sell those 100 shares. So say you buy an Apple call for 200 strike, a 200 strike Apple call, okay? And Apple goes up to 210. Now, you could choose if you wanted to exercise your right to buy 100 shares of Apple at 200. So you would make some profit, okay? But that's just an example of where it could be beneficial. Now, we don't do this process. I just wanted you to know the basic concepts of it and how these are structured and how they work. But we don't do this. We want to be very clear. There's a way better way to to make money with this, okay? So stay with me. Why do we trade options? All right, first and foremost, I already told you, we can make money when stocks go up and when stocks go down. So that's the first one. All right, number two, remember I told you about leverage, all right? They're leveraged off of 100 shares, meaning you will make 100 times more. Yes, 100 times more than if you had just bought the underlying shares. So if you bought Apple stock and it goes up 1%, like if Apple is at 200 and it goes to 202, you make $2. You make 1%, okay? Now, if you had bought a call option for that, you would have made 100%, meaning you would have doubled your money. If you put $200 into the Apple shares, okay, you make $2. All right, you put $200 into a call option for Apple, you make $200. 100 times more. And you can only lose what you put into these contracts, nothing more. You're not gonna have to sell your house and sell your car for this stuff. You can only lose what you put in. And we don't even let it get there. You will never lose your entire investment if you trade with us. I will guarantee you that. If you learn from our mistakes and you trade with us and you trade with me and my team, you will never, ever, ever lose your entire investment. There's absolutely no way. By following us, there's no way you can do that. In fact, one of our rules are, this is some game here, you want to let your profits run and cut your losses quick. Most of the trades that we lose, which doesn't happen a lot, we cut them at 20%, 30% loss, 10% even, okay? As soon as we realize that the trade did not go in our favor, which we'll get into later in the next videos, better stay tuned. This is all good stuff, okay? Once we realize that the trade is not going our favor, we immediately cut. We're never holding and waiting until negative 70, 80, 90%, okay? You're not gonna lose your whole investment as long as you do it right. Now, fourth reason, you can buy or sell options anytime the market is open. 9:30 a.m. to 4 p.m., which I explained in the last video. This is Eastern time. In the last video, I explained what time it is gonna be for you, depending on where you are in the country. Now, just like stocks, you can trade them anytime the market's open. So you don't have to wait any for this time and that time. Also, something I want to clarify, you don't have to wait until the expiration date to sell. All right, now let's do a quick example trade, all right? Say you buy Apple, 200 call, expiring in 30 days. Now let's draw a little Apple chart. This is Apple. Boom, boom, boom. All right, don't roast me. I'm not an artist, I'm a trader. But this is Apple chart, all right? Now say, let's get a little different color here. Say right here, it's at 190. Let's call this 190. Oh, that's not a very good. Say this is 190 right there, all right? Now, you buy an Apple 200 call expiring in 30 days, okay? So we're gonna assume 200 somewhere up here. Apple's at 190 currently. You buy it right here. This is where you bought. Now, you bought a $200 call expiring in 30 days. Now, say the end of this is 2 weeks. All right, let's say in 1 week, Apple goes to 195. Call that 195. That 9's a little better. So you're holding your Apple 200 call. It's only been a week. Apple goes up to 195 first week. Now, at this point, you would probably already have doubled your money. This is how powerful options are. You would have probably, actually, most certainly, if it went up that high, you would have definitely made 100% already. Just an example trade. Now, we're gonna go in a little deeper on how you double, triple all these crazy gains on your money and how you make the money, how you buy and sell it back. We're gonna get into that in this video too. Now, 1 week later, boom, you get to 200. Apple gets to 200. All right, call this 200. Right there. Now, at this point, you tripled your money. You made 200%, meaning you put $100 in, you could get $300 out. This is within 2 weeks, okay? And now you can cash in and sell. You could have sold right here at 195, but if you want to wait and hold for more, you can just sell here, all right? Now, if it went the other way, you could have just sold as soon as it broke below here, or maybe 10% loss, 5% loss, whatever you like, whatever your risk tolerance is. But the upside on this is great, okay? You waited 1 week, you doubled your money. Let's say it went to 195. You waited another week, you tripled your money just by going to 200. And this is all in a matter of 2 weeks. And this is a fair estimate, okay? Apple could move like this in 1 or 2 days. I'm just giving you a fair, cool estimate. Now, this is how it could turn out. This is a good scenario. It could turn out, all right? Goes up to 195. Actually, this is not even a good scenario. This is honestly too slow for me. Usually we make this a lot faster than this. Anyway, 1 week, 195, boom, doubled your money. 2 weeks, 200, Apple gets to 200, and you triple your money. Now, you can sell anytime within this time. You can sell anytime before your 30 days is up, okay? So you don't have to wait. You could have sold at 10% when it was right here if you wanted, or whatever, So you can trim also. You can, if you get multiple contracts, you could sell half right here and sell the other half right here to manage your risk, all right? All good stuff. I hope you understand. Let's go ahead and erase that. And we're going to continue from here. Now, contract premium. I told you, this is what we are buying and selling. Contract premium is what we buy and sell options for. Okay, it's basically the price that we pay to get in, okay? And it's the price that the buyers will pay us when we're selling our contract premium. This is what makes us the money. When you pick the right direction within the right time, like I just showed you, the premium goes up. Then we just sell that premium to whoever else on the market. That's how we make money, okay? Now, I'm gonna give you some better examples of this very soon. I'll probably do that in the next video, but that's how we make the money, okay? The contract premium goes up. Again, let me reiterate, as Apple is going up like this, boom, 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 the contract premium is also rising as it's going up. If you pick the right direction and all other factors are good, contract premium goes up too. And whenever you like, whenever you want, whether it's here, or here, you can sell that contract premium to someone else and it will make you money. Okay, contract premium is the holy grail, baby. That is what we use to make money. Now, let's continue. I don't think that was that bad, was it? If it was that bad, tell me in the comments, okay? But if it wasn't that bad, give me a like, give me a subscribe, because this is only part 2 of the free course. You've got a little bit more ways to go, and I hope this was helpful. If it was helpful, let me know in the comments. If you got any questions, ask in the comments, shoot me a DM. I'll tag my Instagram in the description, baby. Now, if you want to join the Discord and ask me a question directly or something like that, I'll put the link in the description too. Now, we also have a lot of free game in our Discord and on my Instagram. So if you want more than this, if you want a little more, go ahead and get at me there. Now, this is not over. This is not it for the options 101. Okay, we will continue in the next video with some absolutely necessary option concepts that you need to know to be able to trade them successfully. Now, they're fairly simple, but I will see you there. I hope you enjoyed. Now, this was QC Lee. I'll see you in part 3. Let's get it.